So the first example has to do with making a decision about how you want to invest your own money. I'm going to show you 4 different financial investments. I'm going to illustrate that with the cumulative returns of these 4 investments over an unspecified period of time. And I'm going to ask you to simply pick one of these 4 for your retirement wealth. I'm not going to tell you what they are or even over what time period they span. It's a matter of years, of course. And, but I want you to just decide on the basis of the risk-reward properties as illustrated by this graph. Okay? The green line turns $1 into $2. Not very interesting from a return perspective, but also not very risky. Not a lot of ups and downs in your wealth. Red line turns $1 into about $5, but quite a bit more risky. Blue line, even more risky, but more rewarding, and the black line is somewhere in between. So, by a show of hands, how many people would like to have the green line for their retirement? Nobody. 1 person. Okay. How about the red line? How many people would take the red line? Wow, not too many. I want you to remember this moment, because when I tell you what it is, you're going to have some rethinking to do in your portfolio. How about the blue line? How many people want the blue line? Okay, those are the hedge fund managers. Yeah, okay. Entrepreneurs. And the black line, how many people want that? Yeah, that's by far the most popular line in most of the audiences that I've shown this to, because it seems like it's got the best balance between risk and reward, right? All right, let me tell you what you picked. First of all, the time period goes from 1990 to 2008. And the investments are these. So those of you who picked the green line, which is, I think, one of you, you picked US Treasury bills, the safest asset in the world, at least until February the 8th. But not very rewarding, because it doesn't earn much, given that it's so safe. And so had you put your money in that, you would have made very little between 2008 and today. But you would have been safe. It would have preserved your capital. The red line is the S&P 500. A few of you picked that, but most of you didn't. And the reason that you're going to have to rethink your portfolio decision is I bet you most of you who have ever been part of a retirement plan or any kind of a pension plan, you already have the S&P in your portfolio right now. And you didn't pick it, so you have to rethink that decision. But had you picked it, you would have actually done pretty well. Even despite what's happened over the last couple of days, you would have done just fine. The blue line is a single pharmaceutical company, Pfizer, one of the biggest and most profitable pharma companies in the world, way more volatile, but obviously very, very successful. Now, what about the choice that the vast majority of you did choose? Well, that is the Fairfield Century Fund, which is a private fund that was the feeder fund for the Bernie Madoff Ponzi scheme. And so you would have lost all your money. Like a moth to a flame, we are all drawn to high-yielding, low-risk investments. We have a term for that in finance. It's called a Sharpe ratio. The Sharpe ratio is defined as the average return above and beyond the risk-free rate of an investment divided by the risk of that investment as measured by the return standard deviation. And if you look at the Sharpe ratios for these 3 different investments, you can understand what just happened. Stocks, a single stock or an index, have Sharpe ratios that are in the 0.3 range. But the Madoff Ponzi scheme has a Sharpe ratio almost 10 times greater than that, which is really an attractive proposition if it were real. Alas, it is not real. But that's one of the challenges of finance. It's that all of us, it's human nature, we're all drawn to high Sharpe ratio investments. And biomedicine has had a relatively low Sharpe ratio, and the Sharpe ratio has gone down because the risk has gone up, thanks to us getting smarter about these various different therapies. Now, that's not always true, but that's part of the explanation for why there is this thing called a valley of death.